Good morning. Welcome to IG's early morning call. It's Wednesday, the 14th of June. Let's take a look at the headlines as we wait the Fed decision on interest rates a little bit later on today. We'll be live on the IG platform at 7 o'clock this evening. I will be with Richard Snow from Daily FX. We'll be taking a look at that. And ahead of that, we've got markets pretty much up around the world. That being said, a little bit of money taken off the table, possibly at the top of the hour for the European session as we begin out today's trade. But broadly speaking, it's been a good 24 hours for the markets. And the Nikkei, one of the biggest performers on the upside, continues to outperform APAC region markets at least. But also in terms of percentage moves, we've got a move referred for the Nikkei over Europe and Wall Street. All this has driven the yen down, or rather it's a component part about what's happening in the Japanese economy. We've got the Bank of Japan meeting on Friday. The question is will we see government intervention in the yen's performance? And the UK GDP number out just a few moments ago, showing us coming through with expansion by a margin of 0.2% in April. It's broadly in line with expectations. Service sector doing much of the uplift in terms of the heavy lifting in the UK economy. Take a look at what's happening with volatility as we continue to bump along the ground. It is actually up for the fourth day in a row. It's holding recent gains, but it is such a marginal move on the upside. Broadly speaking, we are still, as I say, bumping along the bottom. Volumes across the markets are really light at the moment. We're going to this sort of summer period where we've got few earnings coming through. And I think really this is a question of wait and see. People really don't know which direction to take the market in. Here in the London markets, we're down at the moment on the 24-hour session. We're certainly expecting a slightly lower start to the trading day after the gains that we saw in the last couple of days. We're holding above the 200-day moving average. That itself is possibly significant. Although that being said, you can see we have been below that fairly frequently over the last 6 months or so. But in fact, that is holding up at the moment. The German market's slightly better off after some relatively good gains the last couple of days. We are expecting just a handful of points off from yesterday's uplift, 16,210. But broadly speaking, it's just a question, as I say, of waiting and seeing. We've got the Federal Reserve interest rate decision set at 7 o'clock this evening. And that could well give us a steer on the markets, as depending on whether or not the Fed does go for that hawkish pause, as many are thinking about, hawkish skip, I should say. Perhaps maybe I'll explain more about that in just a few moments' time. But after 2 days of gains, the French CAC 40, very similar to Germany, just a little bit of money on the way down at the moment. Nikkei rally continues. US indices are driving up interest in some of these Asia-Pacific markets in today's trade. The Australian market's back today with a rise of 1/3. The Chinese market's tending on the whole to be on the way down. There's a lot of question marks about what's happening in China at the moment. The Chinese wanting to relax some of the monetary some of the monetary strategy, some of the monetary policy. And this is because we've got some really weak and soft figures coming through in China. Hong Kong Hang Seng stock index down 0.2%. But the Nikkei, one of the better performers that we've got on the markets overall, broadly speaking. And this has been the case recently. We've got 33-year highs. I want to show you the Nikkei 225. You can see building on the recent rise that we've seen. And this is all about that Japanese yen weakness, which I'll take a look at in just a few moments' time in the context of this rally on the Nikkei. Wall Street close. Tesla has closed a gap we saw back in 2022, September 2022. That was a technical move, but it did help some other tech stocks do well in yesterday's session. You can see the Nasdaq up almost 0.9% yesterday, S&P 500, and Dow Industrials also enjoying a little bit of an uplift. Another stock on the way up was at one point this stock. This is Advanced Micro Devices. It actually closed down all sessions, down 3.9%. But in fact, it before then it struck out to highs not seen intraday yesterday since the 18th of January 2022. Amazon.com is considering using AMD's AI chips for Amazon's cloud computing services business. We've heard a lot about what's been going on with NVIDIA, which tends on the whole to be a games chip manufacturer, but AMD really benefiting from this move that we've got into AI. And broadly speaking, it was tech stocks, I say, leading the gainers on the session yesterday. Let's take a look at what's been happening with the UK economy, because we've seen some GDP numbers out just half an hour ago. The economy, broadly speaking, expanded 0.2% month on month in April. These are GDP figures. As far as I'm aware, this is the only economy which produces regular monthly GDP figures. GDP tending on the whole, broadly speaking, to be a backward-looking figure because it does this quarterly sort of cycle. But this does bring us up to date a little bit. And it just goes to show, and I think underscores, the belief that the UK economy has avoided a recession. This is rebounding from a 0.3% drop that we saw in March, a contraction. But as I said, it was in line with expectations. Services sector, the main contributor to the growth, led by wholesale and retail trade. And the repair of motor vehicles and motorcycles, while manufacturing and construction are seen shrinking. So the numbers, broadly speaking, showing gains. We've also seen some other numbers coming through. Industrial production, 1.9% drop in April, year-on-year expectations of contraction of 1.7%. Ditto for construction output, up 3.6% year-on-year. Expectations have been there for a 4.3% reading. Bloomberg is reporting that traders now see a 50% chance of Bank of England raising its key rate to 6%. We're currently at 4.5%. Let's take a look at sterling against the US dollar. This is in the context, I think that rise yesterday was in the context of a drop back for the US dollar in the wake of that softer consumer prices number that we saw yesterday. And this goes to underscore, I think, the belief that the Fed will skip in its move on interest rates. We've seen 500 basis points added, 5 full percentage points added over the last year for US interest rates. And I think the Fed, broadly speaking, economists saying the Fed needs to pause in order to make sure it sort of can regroup itself around its activity. And this has meant that money has been going into the euro, it's been going into the sterling markets. And we've got this 126.11 print at the moment. Bank of England widely expected now to lift by 150 basis points over the next year or so. A 50% chance, according to traders, Bank of England raising rates to 6%. That would be 150 basis points up from where we are on base lending. And that's sort of the reason why I think we've got sterling rising at the rate that it is. But I think that tonight the Fed will confirm pretty much what many have been expecting. Markets are pricing in a rate pause at between 5 and 5.25% for the Federal Open Markets Committee after 10 straight meetings, which has jacked up its key rate by that margin of 5 percentage points in 14 months. Economists do see this coming meeting as an opportunity to pause to see what degree of a slowdown is managed with its action so far. Markets are beginning to price in a further possible 25 basis points at the end of July and possibly again over the summer. Latest inflation published yesterday confirming that a pause is expected. US consumer prices decelerating more than expected. Headline CPI rising by 4% in May year-on-year. This is the smallest increase in more than 2 years. It's undeniable that the effects of the Fed rate hikes are felt more and more, justifying this pause. However, core CPI remains the big sticky element in this. It came in line with expectations, up 5.3% year-on-year, 1.3 percentage points higher than the headline CPI, which suggests that tightening cycle is not yet over. At 1:30 p.m. today, we get US producer prices. That's forecast to fall year-on-year by a margin of 0.1% in May, month-on-month, year-on-year. PPI is expected to rise by 1.5%. Now, the Japanese yen is one of the most interesting parts of the foreign exchange markets at the moment. It's close to its recent low against the US dollar, which, as we saw, as we've seen in the markets, has been feeding through to this really big move up in the Japanese Nikkei 225. Last September and October, we saw the Japanese Finance Ministry intervening 3 times in the market. I want to show you what's happening with the dollar against the Japanese yen. We're not too far away from recent highs to the dollar against that weaker Japanese currency. And not too far away from levels on the Nikkei 225 that we've seen in 33 years. But last September and October, Japan's finance ministry intervened 3 times when the Japanese currency hit levels not seen since 1990. Still a long way to go to get back to those levels. But if the differential between Bank of Japan rates and other central banks continues to widen, it's likely that the yen will weaken further. And some market watchers are already predicting more intervention. There's a BOJ rate decision on Friday, but it's not likely to yield a move up in rates despite a rise in inflation, according to economists who want to see a rise in wages first. Let's take a look at what's happening in some of the other markets, because the euro is stronger against the Japanese yen. Not too far away from this 15-year high for the euro against that weaker Japanese yen. The Fed's expected to pause tonight. ECB forecast a raise in rates on Thursday by 25 basis points. And another forecast is expected by the bank's July meeting. And it's not just against those two currencies. The yen is weaker as well against the sterling trade. And we've got a print here at 176.71 for sterling against the Japanese yen. And you've got to look a fair bit back in history to see when we were last at these levels. And we were last at these levels at 2nd of Feb 2016. So you can see that the Japanese yen is weaker against a whole basket of currencies. Bank of England expected to keep its tightening very much in place, which goes to add weight to sterling against the yen. Now let's move on to corporate news headlines. Just one company I think worth mentioning this morning, and that's Shell. It certainly could be a mover at the start of today's trade. The oil giant, which is listed here in the London market, will open at £23.01. It's announced this morning it will increase its dividend by 15% starting in the second quarter of the year. Shell's chief executive, while Sarwan, appointed in January, is working at regaining investor confidence around the stock, announcing a share buyback program of $5 billion to start in the second half of 2023, up from $4 billion in recent quarters. Capital spending has been cut to $22 to $25 billion per year for 2024 and 2025. Annual operating costs are also to be reduced by $2 to $3 billion by the end of 2025. I think this all goes potentially to look possibly at some upside. Where do we go from here? At 23.01, your stop would be tucked neatly under here around about the 22.50 level. We've got some headwinds up above where we are, which includes a 200-day moving average at £23.70. So that might be a little bit of a headwind in any move up in the stock of Shell, but certainly this is positive news out this morning. Let me just stay on the charts because I wanted to take a quick look at what's happening with the European aerospace company Airbus. This is the French listed stock of Airbus. Actually, you can see here that in yesterday's session, we have seen highs in the stock not seen since February 2020. It's lifted its forecast for freighter deliveries to 920 from 890 jets. Airbus also sharply revising up its forecasts for the number of old aircraft to be replaced in the coming 2 decades to 17,170 units from 15,440. That is a long-term story for the company, which used to trade as EADS. But as you can see here, we're knocking on the doors of levels not seen since the 19th of Feb. The record high we've seen in the stock was all the way back up here at 139.30, which is back in January 2020. Let's move on to take a look at other areas of the market. I want to take a look at commodities, and I thought I'd begin with what's going on in the oil markets, where I think, if anything, this is probably more interesting than most other areas at the moment. We saw a nice little rise yesterday. That being said, it wasn't as big as the candle on the way down the previous day, but we're building on that today at 74.55. Yesterday evening, the API survey showed 1 million barrel increase in crude oil inventories. Gasoline and distillates also rising by 2 and 1.4 million apiece. Now, this tends on the whole to indicate that there is more oil than needed in the market, but we saw that rise yesterday. As I say, we're building on that there at the moment. Staying on the charts, just 2 more. Gold, not much move on from yesterday's drop, but we're holding the 50-period moving average. But for me, one of the other areas of the market where I think there's a lot of interest coming through, and that is the price of copper. Let me just get the copper chart up because this is the subject of a really interesting note out from Citigroup that says it expects a doubling in the price of copper by the end of 2025. Now, we're currently trading at 8,406 per tonne for copper, and the copper price has pulled back considerably from the highs that we saw at 10,800 back in March last year. This is all about concerns about Chinese demand. But Citigroup is saying that when demand does recover, the price will really begin to reflect the fact that there is massively insufficient amount of copper coming into the market. Then there is going to be demand, and Citigroup is saying that is what's going to drive the market up by 2025. I urge you to take a look at that report. If you Google that, Citigroup and copper, that should come up, and you'll get explained to you what's going on there in that tight market, or tight certainly as we look out in the next couple of years. That's it. We're back at 10:30 with Chart in the Markets. Axel this morning taking you through some of the charts to watch out for. Do watch out for the chart of Shell this morning from that good news about its dividend. Back at 10:30.